It's been one of those weeks. Prices are red, momentum feels flat. Every chart you look at seems to be rolling over at the same time. And when markets move like this, the mood always shifts. People start asking whether they missed the move, whether the cycle is over, whether the optimism from a few weeks ago was misplaced. But here's the thing most people forget: when everything pulls back together, markets don't move in straight lines. And they don't move on emotion, they move on structure. Pullbacks aren't failure, they're resets. And sometimes they're happening right before something much bigger changes underneath the surface. That is what I want to talk about today. Because while price action has been drifting lower, something far more important has been moving forward quietly. And it matters more for XRP than almost any other asset in this market. If you're new here, I'm Paula. This channel isn't about price predictions or hype cycles. It's about understanding why markets behave the way they do through regulation, liquidity, incentives, and macro structure. And XRP sits right at the centre of one of the most important structural shifts crypto has faced since it first touched the traditional finance system. So let's start with the obvious. Yes, prices are down across the board. Bitcoin has pulled back. Altcoins feel heavy, and XRP is no exception. But when everything pulls back together, it usually isn't about fundamentals breaking, it's about positioning. Capital de-risks, leverage unwinds, expectations reset. That doesn't kill a thesis. It clears the runway for the next phase. And for XRP, the next phase has never been about momentum or speculation. It's been about permission. Because XRP's problem was never technology. This is where XRP has always been misunderstood. It wasn't held back because it didn't work. It wasn't ignored because there was no demand. And it certainly wasn't lacking real-world use cases. XRP stalled because institutions don't move in grey areas. Banks don't guess. Payment providers don't experiment with legal uncertainty. Treasury desks don't allocate capital to assets that might be reclassified later. For years, XRP wasn't being priced as infrastructure. It was being priced as unresolved. And that's a very different thing. So while most crypto assets benefit from regulation, XRP depends on it. Because XRP isn't trying to sit outside the financial system. It's designed to operate inside it. Settlement, liquidity bridging, cross-border payments, institutional grade flows. Those markets don't run on narratives, they run on rules. And that brings us to the real story unfolding right now. For a long time, regulatory clarity was just a talking point. Useful, hopeful, but vague. That's changed. The Clarity Act, the US Digital Asset Market Structure Bill, has moved out of abstraction and into an actual legislative window. Senate committee leaders have signalled that mid-January is the target for markups and committee votes. That matters, not because it guarantees everything, but because it collapses uncertainty. Markets don't wait for laws to pass. They move when probabilities shift. The market doesn't reprice assets when legislation becomes law. It reprices them when legislation becomes likely. A successful committee vote does something very specific. It puts lawmakers on record, and it forces legal, compliance, and risk teams to start preparing as if clarity is coming. That preparation phase is when positioning happens. Quietly, methodically, without headlines. The Clarity Act isn't about promoting crypto. It's about assigning responsibility. It defines when the SEC has authority, when the CFTC does, and how digital assets transition between the two. For XRP, this is critical, because XRP behaves like a commodity in function and use, but it's been trapped in regulatory ambiguity. Once that ambiguity lifts, the conversation completely changes. When clarity improves for most crypto assets, sentiment improves. When clarity improves for XRP, eligibility improves. eligibility for custody, eligibility for balance sheet treatment, eligibility for enterprise deployment at scale. That's not a hype re-rating. That's a structural one. You've already seen this dynamic play out. Bitcoin surged on optimism, then pulled back sharply on Senate delays, not because fundamentals changed, but because timing did. And that tells you everything you need to know. Markets aren't ignoring regulation, they're trading around it. And XRP, because of its regulatory sensitivity, tends to lag during uncertainty and lead when definitions firm up. That's why pullbacks before clarity events matter less than people think. They're often just clearing excess positioning before the next leg. While retail attention has been on price, Ripple has been doing what infrastructure companies do best: building quietly, expanding enterprise tooling, strengthening treasury and settlement capabilities, positioning XRP and its ecosystem to operate inside regulated frameworks the moment rules allow. This isn't a company waiting to see what happens next. It's a company preparing for when things finally become allowed. Ripple has been very clear about one thing. It doesn't want to go public, at least not yet. And that's not a lack of ambition, it's strategic discipline. Public markets introduce quarterly pressure, disclosure constraints, short-term shareholder incentives. Infrastructure companies don't benefit from that early. Staying private allows Ripple to negotiate with regulators, governments, and institutions without market noise. That's exactly what you want when regulation is still being written. So why doesn't XRP trade like a normal altcoin? This is where a lot of frustration comes from. XRP doesn't pump when memes pump. It doesn't follow retail rotation cycles. And it often feels like it's missing moves. That's because XRP doesn't trade on excitement. It trades on permission. And permission is slow until it isn't. So what happens after clarity, and why is that not going to be instant? It's important to be honest here. Clarity doesn't mean a single green candle. It means a repricing process. First comes legal green lights, then compliance frameworks, then limited exposure, then scaling. By the time retail notices, positioning has already happened. This is slow money, and slow money changes markets permanently. So when you see prices down this week, it's easy to feel uneasy. But pullbacks don't cancel structural shifts. They often precede them. Markets breathe in and out. They reset. They shake out weak conviction. And then, when clarity arrives, they move again. Not emotionally, but mechanically. XRP doesn't need rescuing. It doesn't need reinvention. And it doesn't need hype. It needs definition. And for the first time in years, that definition isn't theoretical. It has a timeline, it has political momentum, and it has consequences. If you're watching XRP purely through the lens of short-term price, weeks like this feel discouraging. But if you're watching it through structure, regulation, and incentives, this looks very different. The infrastructure is already built, the enterprise demand already exists, and the use case is already proven. The missing piece is clarity. And when that arrives, XRP stops being debated and starts being evaluated. This is exactly why we built the Crypto Wolfpack. Not to chase moves, but to understand why markets move across bull and bear cycles. And if you want to know the exact strategies we use to make money in both markets, we've made a completely free course for you. It's called the Crypto Liftoff course, and the link is in the description below. If this video helped you see the bigger picture during a red week, give it a like, subscribe if you want more deep dives like this, and let me know in the comments. Do you think clarity changes everything for XRP? Or just the timing? Thank you so much for watching, and I'll see you in the next one.